All right, so let's talk a little about the dollar index. Dollar index is pulling back here ahead of jobs data. And we're going to draw some setups here. So what we're expecting here is less than last time. We're expecting, in terms of forecasts from analysts, 238,000 jobs. Last time it was higher than this number. You can see last time we had 303,000 jobs added. We're expecting some lighter numbers here this month. Now, one thing I want to tell you right off the bat, Frank came into my office yesterday. You guys know Frank. He's my first mate on this ship that we're on for Pirates Month. He came into my office and he said, Nick, jobs data has been consistently higher than expected in the last several months. And I said, well, let me take a look at it. I know off the top of my head, I'm like, yeah, it's been pretty hot. But what I'm realizing here, guys, is the red dot is your forecasted number for jobs. And the blue column is what actually came out. Now, the yellow line, by the way, that's the revisions that we've added to our jobs data chart here on the Edge Finder. So check this out. Each time in the last 4 NFPs, actually 5 NFPs, we have seen jobs data come out higher than what was forecasted. Okay? So what you have to understand here is that we've been on a trend of hot labor market data. Today, we're forecasting for, again, 238,000 jobs. If we come out higher than expected, what does that do to the dollar index? Well, it makes the USD look strong because, again, that's saying, hey, the labor market in the US is strong. The dollar is a safe haven. Let's stay long dollars. That's the basic idea. Now, what about if jobs data comes out weak? Of course, it's the opposite. Jobs data being weak would push the dollar down. Now, again, if the trend is our friend here, we would probably expect strong jobs data. We've seen this theme. The U.S. economy has stayed relatively resilient despite what has been, in recent times, higher interest rates. Long term, it's about average interest rates, by the way, where we're currently at. It's just that we've gotten used to in the last decade or two. Much lower interest rates on average. So regardless, there's a lot to talk about. So I'm going to try and keep it fast paced. But what we're looking for also is we got claims data here earlier this week, came in just slightly less than what was forecasted, but not by much. JOLTS job openings continuing to trend down. If we're talking about unemployment rate, this is another big one today, guys. The question becomes, are we going to see that unemployment rate tick higher, or is it going to stay flat or lower? Again, if you're talking a strong labor market, so if you're a dollar bull, you want this number to stay flat or potentially go lower. Let's see what the forecast was again. So real quick, forecast is 3.8. So they're expecting it to stay at where it currently is in terms of the unemployment rate. This is the percentage of people filing for unemployment. So if that number is, the percentage of people who are, actively looking for work, filing for unemployment, right? 3.8%. Data comes out in 7 minutes, guys. The data, all 3 of these are very important. I know that, it can be a bit confusing to look at all 3, but this is why we look at all 3. Each one of these is a very important read. We're trading at just under 2,300. This is pivotal for gold, guys. I mean, this you could not set up a more interesting chart ahead of NFP for gold, because check this out. It's clear we've lost, this may look like a slight pullback on the daily chart, but that's just because the volatility has been so high. This is still a pullback. Currently speaking, we're off $135 an ounce from the highs. I mean, that's a substantial pullback here. The question is this a pullback or is this a reversal? And I think that if you see really hot jobs data today, it's possible that gold could start breaking those lows. And perhaps, I made this point yesterday, perhaps the next area of support that we have to go to is all the way down here at 2,200. Is that going to happen? Well, again, see what the jobs data brings us. The jobs data won't bring us all the way down there. That would be, if it does, oh my gosh, that you like tripled the expectations for NFP. But if you want to see a trend start to form to that downside, if you're a bear on gold, you're probably looking for that jobs data to come in real strong. Conversely, if you get weak jobs numbers, the market's going to celebrate the prospect of potentially rate cuts are still on the table and could rally higher. So how that will actually impact my setups is, of course, we use the Edgefinder's top setups algorithm to generate bullish and bearish readings. We're going to be looking at these columns, the employment change and unemployment rate. These statistics will update here shortly after the data comes in from NFP, and that will impact our total scoring system. Now, gold will be very interesting. Let me tell you right now, if you get weak jobs data, this is going to tick into a bullish setup for the Edgefinder. So heads up, look at this, guys. The way this works, the software is tracking the data as it's coming in. When that data updates, if it comes in weak, these are going to flip into a bullish territory, just like the other ones, like other markets, right? And it's going to say, oh, now gold is going to get a plus. What would that be? That'd be a difference of 2 on each of these. So we'd get, you know, a +7 on gold all of a sudden, right? That's a bullish setup for our algorithm, right? So we are watching the data. This is how the data impacts the setups. We're getting really close here. I'll tell you guys a little bit more about that. We're just about 30 seconds out. So let me just quickly move over here so that we can see all markets. So real quick, S&P 500, NASDAQ, you got your Dow here. Here's the dollar index, euro, pound, gold, and we've got oil in the bottom right. So there are all your charts here, guys.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
All right, and jobs data is out. Dollar index coming down hard here. Gold jumping, pound USD jumping, euro dollar jumping, stocks jumping here initially. Let's have a look at the reaction. 175,000. Wow. Okay, so a lighter print here. We're now seeing. So the market's going to cheer this. I can tell you that right now. Market is going to cheer this. In terms of the market, I'm talking about the stock market and gold, really. They're going to cheer this because what this suggests is finally, maybe we're starting to, it's a little bit early to call it all off, but starting to see some weakness in the labor market. And if that happens, you know, you've also had a round of earnings reports and also average hourly earnings came out light. Wow. This is slowing in the jobs world. That is a surprise here to the downside here, guys, when it comes to labor data. Again, that justifies completely a sell-off in the dollar. And you can see that is happening currently. There goes the dollar index breaking through that level 105. So dollar bears, maybe you have your day here. Maybe something is starting to form. What this would tell me is that retests are probably looking like bearish setups now, surprisingly here. So gold again bouncing off this level, as we mentioned. The question is, can it persist? Can you get, you know, breaks of structure here? There's a couple levels here. If you're watching gold, here's some things to look out for. And I'm like I said, I'll probably be looking at gold setups myself here pretty soon, simply because the way the Edgefinder is calculating a score for gold, once this updates, it usually takes about 5-10 minutes max. This will flip. Both of these are going to flip bullish. Unemployment change was lower than expected, so we factor that in our system as bullish for gold. And unemployment rate ticked up. We call that also bullish for gold. That's a difference of you go -1 to +1. That's a range of +2 and another +2 on the Edgefinder scoring. What you're left with is a significant change to +7 on gold. So I am actually looking now for gold bullish setups. So how am I playing that? Again, kind of a turnaround. I thought we might break that level, but it looks like we might have some reason to stay convicted here at this level around 2,300. Perhaps 2,300 is the dip. What I'd be looking for, again, from an entry point on a 4-hour perspective, I'd like to see if we can follow through a little bit, right? Break out here, pull back here. I like that. I like that setup. It's my personal opinion. As always, remember, I'm not here to give you financial advice. Do your own thing. I trade my own money. You trade yours. I'm not here to tell you what to do with yours. So I'm watching for a breakout on gold here now that we've spoken about the numbers. Again, NFP came in very, very light, and I think gold is probably going to cheer that. So yeah, let's see what else is moving. So stocks are loving this. The S&P 500 up, 0.75% on the day. The NASDAQ is up just shy of 1%. The US 30, so this is your Dow Jones Industrial, breaking out and looking really strong here. The Australian dollar loves this, by the way, because again, what you're seeing now is you're seeing the just undefeated labor market in the US starting to show signs of cracking. Maybe it's not so impossible for the jobs data to start to come in cool. So we're at a level of resistance if you're watching the Australian dollar. And I know the temptation is probably there to just sell this. But for me, I can't really justify, just selling this. Now, if you get a weak candle here, like if you see like some rejection, I think you have to look at the full picture and you say, okay, what's the full picture look like? Well, let's take a look. So the full picture, if I go over to our data scanners here for a second, and I want to pull up the Australian dollar here. Okay, so Australian dollar is -4. Now, what you have to understand is this data will be updating soon. This algorithm factors in. It's usually on a 30-minute timer. So pretty soon it will update. And once it does, what you'll see is that, again, we're going to get a neutral reading here. That's, again, when comparing everything from GDP, PMIs, manufacturing. So at the end of the day, basically, long story short, Australian dollar too neutral for me. There's not a clear, decisive winner when looking at the data here. So chart wise, again, if you're a seller, I'd wait to see how this candle closes. But if you're a buyer, I'd say, let's see if we can break outside. If we break outside, my opinion would be, it looks like technical wise, it could continue. Oil, people asking about oil. Yeah, let's have a look. So oil probably not going to absolutely love this data, but not going to hate it either, because it might suggest rate cuts that could stimulate the global demand for oil at some point. But really, strong jobs data now would have been, more attractive to oil, I think, right? If you just had really strong jobs data, again, the demand for oil is very supported. We've seen recently on the daily chart that oil has broken a key level of support. I actually think, I don't think we have a setup on the oil market right now. Let me double check that. Yeah, oil is just neutral. But from a technical only perspective, again, this level here broke out, support broke. Pullbacks into that, to me, I'd be a little sketched out to be a buyer, simply because this area, again, if buyers were really strong, I would have imagined they would have held that area. Pound USD, sure. We'll look at GU. Pound USD, look at this, completely flipped. I thought we'd see a bigger sell-off than this. I shorted the euro instead of the pound. Again, stopped out for me, so not working out on that one. But pound USD, also I thought this would have a sell-off, did not. So bit of a flip, bit of a turnaround here in terms of the data here this morning. What I'd say is if you're watching the pound USD, keep an eye on the Bank of England as always. Same thing with the Fed. In terms of pound USD, we're getting a neutral reading, so no setups for me on GU. Technicals, let's see if you can break structure. Maybe you're starting to form a bigger uptrend. We'll see, but nothing too solid there for me in terms of setups. US 30, let's take a look at it. US 30 is the Dow Jones for those of you guys who trade futures. Dow Jones here, nice little breakout. Again, breaking through resistance. Let's see how this candle plays out. You have support that was over here. It became resistance. Now we're breaking through that level. Watch the candle closure today. If you get a nice solid candle closing outside of this level, maybe you've got something here. Maybe the bulls are back for the stock market. But I'd like to see a strong candle similar to this one breaking outside of resistance. NASDAQ, similar story. We're trading into a level of resistance right now. Be very careful that you don't get too overhyped on this, because here's my opinion on this. Is this jobs data really that bullish for stocks? Let's answer that question. Is jobs data coming in light good for stocks? Here's my opinion on it. I think people who are craving slowdown in the labor market, it's like saying, I want to get more sick so that I can have some medicine. Does that make sense? Not my analogy. Josh Brown on CNBC said that yesterday. I'm stealing his analogy, but let me say that again. Hoping for weak economic data is like saying, I want to get more sick so that I can have some medicine. If that makes sense, do you guys get that? Type yes in the chat if that makes sense. That's what you're hoping for stocks. You're saying, I want the economy to weaken so that I can have stimulus, so that I can have, anyways. My point is, I'm a fan personally of being a stock market buyer when you straight up have good jobs data and cooling inflation. Obviously, that's what everybody wants, right? Nick, you just explained the perfect scenario. I am aware of that. But to me, it's like I don't really want to see the Fed change one problem for another. Yes, you might be able to get rate cuts, but is that because the labor market starts to really cool and people start becoming unemployed? So, wow, we're getting lots of no's. You guys didn't like my analogy. I'm sorry. Apologies for the bad analogy, I guess. What I'm trying to say basically is, if you are looking for labor market data, economic PMI data, all that data to come in really weak so that you can have rate cuts to get the stock market to go up, to me is just a weird one. I prefer the idea of the data stays relatively strong, but then we find a way, we see the inflation print start to come down. If the inflation print is coming down because the economy is really struggling suddenly, that's not very exciting. People are saying gold reversal, check the gold chart. Let's take a look. Yeah, wow, gold really did reverse that. Gold really reversed that, and that might be a buying opportunity in my opinion. On top of that, you also have the lack of the same reason oil is down, right? Oil is trending lower because geopolitics have cooled off. So you're losing some of the other stories. So yes, jobs data is light and uncertainty should pop gold. The other big uncertainty is war and the Chinese economy, which have restored some confidence. So I think you're getting kind of a mixed picture. What do you think about that?
Yeah, I guess I wasn't really going into that frame of reference, but yeah, I guess China's economy and the U.S. economy doing better, I guess, subsides those fears. But you would think if China's doing well, it should be good for gold, right?
Yeah, well, I think that just the mass demand for it from the Chinese people, Chinese investors who have just probably gotten tired of seeing their stock market just get destroyed for so long. I mean, it's had such terrible performance relative to peers and relative to the rest of the world, going into gold. But again, seeing some good earnings out of the U.S., seeing some bounce back in China, perhaps it's just restoring a little confidence. Ivan, is there anything that we missed on that? Gold, why is it down today with jobs data coming in light?
You have to kind of see a couple of things, Frank. I'm not tossing you under the bus, just jump in the boat, sinking boat here. You wouldn't buy gold if everything is going great in the stock market, because you will be getting better returns. So gold is when you are scared and everything else. So that can be one reason. Second thing, it seems like the buying season is over for whoever it was, central banks, national governments, because that's really driven gold to, I don't know, what was it, 2000 something, 2400 something.
Here's another thing. Those fears of the hikes going away caused yields to fall. So watching the 2-year drop down to support here on the 1 day, it's now at 4.7, and a couple days ago it was testing above 5. So that's what was keeping the market at bay for some time. And now that it's dropping, yields and gold kind of they move. Well, actually, no, they move differently. So I'm still confused.
I have a point.
The stock market, I guess, doing well, better than what people have feared, and the economy being more resilient, or less resilient. Oh my gosh. It's like, it's such a mixed bag. Like I don't really understand, but I was betting on volatility this week, and hopefully it plays out, because I have a iron condor trade on the NASDAQ, which is just TQ. And price has got to move here or here by expiration. The fact that it's already here is good. So the option is more expensive now, but
dollar index, the pound, the euro, gold is right here, and oil is right here. Again, we're coming into PMI data just about 30 seconds out or so. So higher PMI would mean lower DXY. No, higher PMI would mean stronger dollar index, as that would be economic confidence, lower than expected. It's all about the forecast and actual. So
if we saw higher unemployment, lower wages, lower NFP, you'd think PMI would be lower then, or I don't know.
Yeah, maybe so. Maybe that has some correlation there. We'll have to see. Coming in, breaking news. All right, let's see what we get.
Ouch.
2 years coming up.
Dollar index slightly lower here.
49.4.
49.4. Coming in light. So now the question is, that good for the stock market? You know, now you've got dual misses in terms of economic data here this morning. And that should be good for gold, right?
Uh-huh.
What's gold
blip
doing?
higher. Yep. Stock market dipping a little bit here. That is, I mean, that's a pretty decisive miss. Is that not, Frank? I mean, that's a pretty big miss.
Yeah, that's contraction, which is, I mean, not good for the market, but also good for lower interest rates, I guess.
Yes. So that's where I think your reaction arguably could be mixed, because again, rate cuts, okay, yes, but also company performance maybe not so hot because of that. I don't know. Ivan, what's your take? Dollar index, is that going to change anything here for the day?
Lower than expected PMI should be good for stock market. Bearish for dollar. So I think what we're seeing is it's a bit of psychology. I have to argue, because if a stock market now is pulling back, it's because the move has already happened, and then it's just trying to fetch lower prices. Or they just could be opposite. Like good news, bad news is good news, and good news is bad news. Going totally opposite on us, because they should have fallen on the NFP and should have risen on this one, and now they're doing the opposite. But to be honest with you, I think this is gonna trigger at least a bullish trend next week on the stock market in total.
Fair enough. Fair enough.
Well, what do you think is heavier news? Is it NFP or PMI?
Probably NFP, right?
I would think so too.
Is it? Because PMI has more. NFP has been pretty a bit higher than expected for quite some time now. It's been strong. It's been pretty normal, also pretty the same. Around 200, high 200s, up to 3. So yeah, it's been quite constant. So the miss today might shake that up a bit. But I would actually argue PMI, because PMI is activity activity in about 1 to 2 months down the line. NFP is previous or current.
This is the first contraction since January of last year.
Interesting.
Yeah, that's significant. But yeah, so I think that's going to be, I think that's going to be good for the stock market overall, because it, at least that fuels more than NFP, fuels rate cuts coming in. And then if you add bear CPI on that one, then you have a whole ball sack of negative news that is good that was going to lead to lower interest rates. But it's just 2 indicators. It's not the entire world.
It's fair enough, guys. I went long gold. I am. I'm taking the stab.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.